Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Hurt Locker over at his casa, and you know you're rolling with Big L, the other half of the Dividend Diplomats. And we can't wait to talk to you about a stock in particular in an industry that's been out of flavor for the last few months or better part of a year.
Exactly, Lanny. But before we dive into the details, everybody, you know the drill. Smash that subscribe button. Give this video a thumbs up. We are cruising towards 10,000 subscribers, and we really appreciate all the support. So please help us out. Hit 10,000. Watch a wrestling video. But you know what? We'll worry about that when we hit 10,000. Let's dive right in, Lanny, and let's talk about this undervalued stock that it may be time to buy.
So as you know, here at the Dividend Diplomats YouTube channel, we like to talk about dividend stock. This is what we're about. We're about talking to you about our point of views, our research, Bert's take, my take, our take on dividend stocks. And, we always like to bring in even stocks that, people may not be thinking of, or people may be hesitant to even talk about because maybe they are thinking of it. And I mean, one industry in particular, Bert, I know that has been a taboo as of late, especially when I think around this time or a little bit before this time last year during the heat of the pandemic, we had negative future prices of oil. So, Bert, I just gave it away. What industry are we talking about here?
We're talking about the oil sector, and yeah, it is controversial for so many different reasons, but because that price per barrel collapsed, a lot of the companies' dividends were just hanging on tight as their revenue source, their earnings, their cash flow collapsed. So everybody, that's what's exciting here. We're starting to see some rebound. The price per oil barrel has started to make a pretty strong comeback, and these big oil companies,
What a comeback, baby.
yep, and these companies that have released their earnings have shown strong revenue growth because that price has increased. So that's why we are refocusing on the sector, and we want to talk to you about one of the major companies that is a heavy player in the dividend investing community.
I mean, we all know the bad news about Occidental Petroleum, OXY, and I even wrote an article this time last year. Occidental has an accidental dividend problem or a debt problem.
Hey-oh.
Yeah, so typically in this industry, there's always a lot of debt. And this company in particular that we were going to talk about was the company that was so committed to the dividend that they were going to increase it at all costs. And that cost meant they were just adding debt to that balance sheet. And they actually, back in 2000, late 15, early 16, had their credit rating slashed down, which obviously impacted the company's ability to borrow and their lending costs. And Bert, gosh, man, I know you and I have a lot of history with this dividend stock in the oil pipeline industry. Bert, what stock are we here to dive into and talk about this dividend stock potentially being back on a watch list, potentially being back on a radar as a dividend stock to consider buying?
That company is Kinder Morgan, ticker symbol KMI. So what we are going to do is we are going to run them through the Dividend Diplomats dividend stock screener. Quick summary, the three metrics of our stock screener are PE ratio less than the S&P 500, payout ratio less than 60%, and a history of increasing your dividend by reviewing the dividend growth rate and the dividend growth history. And of course, we'll look at the bonus metric of the dividend yield. So we are recording this with the stock prices as of 4/20/21. So just keep that in mind as we go through this analysis and we talk through the metrics. The stock price is closing as of April 20th, 2021.
Now, I appreciate you actually saying that it's as of April 20th, Bert, because management is releasing something on April 21st. When we fully edit this video, we'll actually put in more information about the earnings release in the description and maybe even some blurbs on this video here that you'll see. And I know there's already an expectation built in for this earnings release, because this is typically the month that KMI, since they cut their dividend down from glorious 51 cents per share per quarter back in 15 to 12.5 cents in 16. Well, that 12.5 cent per quarter dividend has already roared back up to 26 plus cents as of 2021, and they still increased the dividend in April last year in the the pandemic, baby.
You beat me to it. Not only in the heat of the pandemic, in the heat of the price per barrel collapsing too. So there were two major negative headwinds hitting this sector and a lot of the companies in the oil and gas sector. And KMI still found a way to increase that dividend. So that's why we're excited to see the announcement in 2021. And even if it is not the double-digit % dividend increases that we grew accustomed to over the years from KMI.
Bert, hey, what are the analysts expecting? What's that the price to earnings ratio and sliding into that currently dividend payout ratio pre-earnings release?
Let's do it. Price today, $16.55. The expected earnings are 92 cents per share. So that gives you a PE ratio of 17.99x, which in comparison to the S&P 500, which has a PE ratio of over 40x, it's pretty good right now, showing some signs of undervaluation here. So it gets a nice big check on the first one here for KMI. Lanny, you want
to payout ratio? I want to hear it from Bertha Hurt, the man who had proclaimed that perfect dividend payout ratio. Let's hear it.
Well, this one, I hate to tell everyone, this one's not going to be a perfect payout ratio, which is between 40 to 60%. Their annual dividend is $1.05 per share. And remember, earnings are 92 cents per share. So wait a second, what are we hearing here? That's a dividend payout ratio of over 100%. So yeah, well, it'll be interesting to see what happens with the dividend, but this will be very crucial to see what's going on with the earnings release and how expectations may change. Because if you look at some of those major oil companies that showed strong earnings growth, that may not be baked into that 92 cent estimate that we're seeing. So I think this will be a very telling metric to keep an eye on, but it's great to see that they hung on to their dividend despite a high payout ratio.
Yeah, oil typically has been at or above 100% for quite some time now. And always ask the question, is this sustainable? So we'll see here and earnings, you would think are going to be hard to project as well right now, which we'll get into that here in a second. But Bert, KMI, so they cut their dividend back. You can call it late 15, early 16. Do they have a dividend growth history right now?
I mean, yeah, it's been 4 years, right? 4 years of increasing that dividend since they restarted, and that average dividend growth rate is 4.23%. So hey, we're getting there with something that's better than zero, and that's better than the negative amounts that they've been showing after they cut that dividend. So obviously it's not close to being an aristocrat status. They've still got 21 more years to go, but you got to restart the streak somewhere, and it's been encouraging that they've increased it since they cut it, and they increased it during the pandemic, which we've mentioned a few times already.
Once they got to go ahead and increase the dividend, I mean, they went from a 12.5 cent. They paid that for almost 2 years straight, all of 16, all of 17. Then April of 18 is when they said, we're going from 12.5 to 20 cents. So you do the math on that. So the reason why the average growth rate right now in 5 years is low is because there were a couple of years where there was no dividend growth.
Exactly, Lanny. Exactly. But it's possible we'll see what comes out of it this year. And just to throw in the bonus metric here, their dividend yield is a very strong 6.34%, which is more than triple the current S&P 500, and actually almost quadruple, right? Would you say, Lanny? Probably quadruple is the better.
I would say way more. I would say even it's almost 5 times the S&P 500. Definitely over because I think the S&P, I think last I checked was like around 1.14%, to be honest on it.
I guess I keep forgetting how much the S&P 500 keeps climbing. Sorry, everybody, for underselling that one. So it's almost 5 times the yield of the S&P 500 and significantly higher than those 0.5%, 0.4% average savings rates that you're getting on your high yield savings account. So yeah, that checks that box too.
So everybody might be wondering, who is KMI? So Kinder Morgan is a legacy pipeline company. In fact, they are one of, if not the largest energy infrastructure company here in the United States or North America, with well over 80,000 miles of just pipeline. And actually, I think they even showcase that over 40% of their natural gas flows through their pipelines. They're trying to do a lot of things right now. Over the last few years, I've seen them sell assets, sell, properties, just again, trying to divest, clean up, pay off debt, pay down debt.
I think it's important. I was
Yeah,
gonna
go
say, I
ahead.
think that's an important point to highlight there because that was why they had to cut their dividend because their balance sheet was in such bad shape from the debt. So they have taken these moves to cut off and sell and pay down the debt from these things. I think it's a great point for you to highlight there, Lanny, because that's why they're able to continue increasing their dividend because of those tough decisions they made to sell off some of these divisions and really focus on their core business. So great point bringing that up.
I bring up natural gas because it's not a straight oil play. Natural gas, is obviously very much here and very much here to stay. So knowing that 40% of natural gas flowing through their pipelines, that there's a nice recurring cash flow to this business. So much, in fact, that the net income in Q4 for KMI, I believe, was 607 million. And that actually compared pretty reasonably to Q4 of 19. I mean, it's almost like Kinder Morgan didn't miss a beat, coming out of the pandemic. I'm not going to set any expectations of my own for what Q1 2021 is going to look like. But if that's what if net income was like that in Q4, then you would expect with an increase in oil, because I know oil is well over $60+ per barrel, plus things getting back to normal, resources being used again more heavily, that Q1 income should be looking pretty solid. But what do you think, Bert?
In terms of what are expecting, what am I going to be doing with KMI? Is that what you want to hear?
What are you expecting? Like, what do you think KMI's business is looking like right now in Q1 2021?
I mean, I think it's going to be the same as oil. It's kind of hard to project. We don't really know the impact of the price per barrel on every single company. We've seen a few companies that have done great. We've seen some great results, but I mean, obviously it's going to be better. That if revenue grows, you would expect, what can you really say? Revenue's increasing. That's going to have a huge trickle through. What the impact is, we'll find out. But I don't know. Not that I don't know, but I'm expecting better than last year at this time.
Now the board is anticipating already a 3% dividend increase. So those of you that are watching this video, more than likely on Thursday, the 22nd, let's see if we actually got that 3% dividend increase on the 21st from the board.
Looks like they must not be concerned about that large payout ratio, which should be a good sign because then that gives us further reinforcement that we shouldn't be that concerned about it either. And they're expecting things to be all right, assuming it gets announced the way that we're expecting.
Right. And you have to think too, with over 6+% dividend yield and over, 3% potential dividend increase, that's actually a pretty good dividend compound factor, as I like to call it. When you add both together, you're close to a 10% compounding factor right there in dividend.
Exactly, Lanny. So thanks for pulling in that background, giving us some more information about the company and the recent financials. So quickly, I'll revisit here and summarize the metrics that we went through in our stock screener. Now, considering what Lanny just gave with some of the background there, PE ratio is 17.99, payout ratio is 114%. Their dividend growth rate's 4.23%. They've increased that dividend for 4 years now after they cut it at the end of 2015, and their dividend yield is 6.34%. So you heard our take on what we're expecting. We would love to hear what your thoughts about Kinder Morgan are. What are you doing with this company? Are you adding more oil to your sector? Are you staying away from the oil and gas sector? Let us know.
You know, I'm definitely very excited. Currently I'm not buying Kinder Morgan, but they could be a stock that you can consider, considering that their price didn't fluctuate as much as others during the pandemic. They have other cash flow sources that aren't so heavily reliant on oil. The board is still determined to keep and increase that dividend. Very interesting company, to say the least. But I'm going to keep my eye on it. They're not making my watch list yet, Bert, but I'm going to keep my eye on it to see if things really do look better Q1. What about you?
Yep, I have plenty of oil in my portfolio. I am good for now. That doesn't mean it's not a fit for anyone else's portfolio. It doesn't mean the metrics aren't looking good, but I am content on oil and gas companies at the moment. So
when they were running out of storage places, they were thinking about throwing it in Bert's basement, on pennies on the dollar. And Bert was like, "Hey, I got some room down here."
Yep, exactly. So everyone, again, please let us know your comments in the section below and subscribe to our channel if you haven't already and give us a thumbs up on this video. Again, we appreciate all the support you've given us and we are pumped up to see what your thoughts are about KMI and some of the other companies out there in the stock market.
Let us know if you think Kinder Morgan is a potential stock to buy or add to your watch list. That was Bertha Hurt and Laney from the Dividend Diplomats with this analysis. Over and out.